Student debt refers to the financial obligations that students incur while pursuing higher education, typically in the form of loans that need to be repaid after graduation or when they leave school. As the cost of education has risen in many countries, an increasing number of students have had to rely on loans to finance their studies, leading to a significant burden of debt for many graduates. The primary sources of student debt are government-backed loans and private loans offered by financial institutions. Government loans often have lower interest rates and more flexible repayment options, while private loans may have higher interest rates and less favorable terms. Some students may also accrue debt from credit card balances used to cover educational expenses. The reasons behind the rise in student debt are multifaceted. Firstly, the cost of tuition and other educational expenses has increased significantly over the years, outpacing inflation and wage growth. This has placed a considerable financial strain on students and their families, especially those from low-income backgrounds. Secondly, reductions in government funding for higher education have led institutions to increase tuition fees to make up for the shortfall. As a result, students are forced to borrow more to cover their education costs. Additionally, the growing demand for higher education and the competitive job market have created a societal expectation that a college degree is necessary for career success. As a result, more individuals are seeking higher education, further increasing the demand for student loans. Student debt can have profound effects on individuals and society as a whole. Graduates burdened with debt may delay major life decisions, such as buying a home, getting married, or starting a family. Some may be forced to take low-paying jobs unrelated to their field of study simply to cover their loan payments. Moreover, student debt can exacerbate existing socioeconomic disparities. Students from lower-income families are disproportionately affected, as they may have limited access to resources and face higher interest rates due to their credit history. This perpetuates a cycle where individuals from disadvantaged backgrounds have a harder time breaking free from financial hardship. Addressing the student debt crisis requires a multifaceted approach. One crucial aspect is increasing financial aid and scholarship opportunities for students. This can help reduce the need for borrowing and make higher education more accessible to students from all socioeconomic backgrounds. Reforms in the education system and government policies are also essential. Advocating for affordable tuition fees and increased funding for higher education institutions can help mitigate the need for excessive borrowing. Loan forgiveness and income-based repayment plans can be beneficial for graduates struggling with loan repayment. Additionally, financial literacy programs can help students make informed decisions about their education and borrowing options, empowering them to manage their finances effectively. In conclusion, student debt has become a pressing issue in many countries, impacting millions of graduates and affecting their financial well-being and life choices. Addressing the student debt crisis requires a combination of efforts, including increased financial aid, policy reforms, and financial literacy education. By making higher education more accessible and affordable, society can better support its students and future generations in pursuing their educational aspirations without being burdened by overwhelming debt.